things we will learn about is any transaction you need document. Document is a proof that this transaction has taken place. The document I have introduced you guys is invoices, right?
Yes.
Now, invoices can be recorded in sales journal. What is invoice? You buy or sell on credit, right? Now, so we record them on sales ledger, sales journal, purchase journal, or sometimes you can also record them in general journal. When do we record this on general journal? When do we record this? No, sometimes the purchase or sale goes to sales journal, purchase journal. When do we record it in general journal? Yes, when we purchase assets on credit. Nothing to do with your inventory. So when it's nothing to do with your inventory, then it goes into general journal. So we learned this. Now, apart from that, we also learn credit notes, right? Now, credit notes is about sales return or purchase return. So again, this can be recorded in sales return journal, purchase return journal, and also general journal if this is nothing to do with your stock. Now, there's something else I'm going to introduce now. Debit note. Now, how does debit note work? Look at this. ABC sold something to XYZ. Who's the supplier?
ABC.
Who's the customer?
XYZ.
XYZ. Right? Now, what happens? XYZ returns some goods, correct? So let's say he returned goods, isn't it? When he returns goods, whatever he's returning, he will send together with debit note. So, who issues the debit note now?
XYZ.
XYZ. The customer will issue the debit note. Because I cannot simply send something just like that. There must be a proof that I sent something, right? So that is where we use our debit note. Debit note is issued by XYZ and sent it to ABC saying, look, I've already returned this good. So what happens after that? XYZ will send credit note. Credit note, right? Saying, okay, yes, I received this goods, I will deduct this much money from you. Make sense? Right. Now, most importantly, only credit note is used to record your sales return or purchase return. What happens to debit note? We do not include in any transaction. It is just to pass it down. Who issues this? Accounts receivable. All the customer, right? Issues. Can you understand? So that's your debit. Now, do we record this? No record, right? No record in book. What is book? Just now in the class we were making fun of this. What is BOPE?
Book.
Principal.
Books of prime
Entry.
Another name for your journals.
Book.
Right. Now, after that, we also learned about receipts. I don't have to go through this. This shows us how much or what we pay. And then we also have checkbook to look at. And finally, we have something called statement of account. Now, statement of account is at the end of every month, the supplier will send it to the customer, saying, hey, look, I sold this much to you, you paid me this much, balance is this much. So what does statement of account says? It is basically a summary of transaction. Summary of transaction that took place that month. Okay? So it will actually remind how much is the balance. Remind the balance owing to the customer. Also to check for errors. Alright? Do we need to record SOA, statement of account? No, it is just there to do the check and everything. Okay? Can you understand? So this is all the documents you need to know. I'm going to erase that part. This one. I think I can erase it. Anyway, we have the video if you want to watch it again. Right. Now, once we finish document, we transfer them to? Where do we transfer them to?
T. Ledger.
No, not ledger. Where do we
Journal.
Yes, we transfer them to journal. Another name for it?
POP.
BOPE. What are the two? General journal and
Sales
special
journal.
journal. What are the special journals we have? Sales journal,
Purchase journal.
purchase journal, sales return journal, and purchase return. Okay, so these are the journals
Teacher.
we record. On top of this, we also have something called
Cashbook.
Cashbook and petty cashbook. Now today we are going to learn on Cashbook. So you see, this is anything on credit and assets and all that put here. This is selling and buying inventories. And what happens to your money? The money that comes in and go out. That has to be recorded in your Cashbook. So this is what we're going to do today. Now let's just continue for a bit. Now once you finish your journal, you will transfer it to ledgers, also known as the accounts, right? Now ledger, there's three types: general ledger, sales ledger, and purchase ledger. Now example: sold goods on credit to cleaner, 500. Alright. So what is this? This is a sales, right? What is your BOPE? Which one will you use? We will use the sales journal. Now, which account is debited? Which account is credited? Debit. Debit. Rina. Credit. Sales. Right. Now, if I were to open up a T account for this, so this is Rina's account. Rina is on your debit side, so 500. What is the information here? Sales. Then I open up sales account. Sales account should be on your credit. What is the information I put right now?
Rina.
Now, what type of ledger is this one? Sales account would be a general ledger. Rina would be a sales ledger. Why? Sales ledger, you record everything to do with accounts receivables. Purchase ledger, you record accounts payable. And then general will be everything else. So you see, sales will go into general ledger. Because this is a receivable account, this goes into sales ledger. Okay? Okay. Now, please write this up and shortly we will do the cash book. First, accounts receivable, accounts payable. You see, any of this account receivable is labeled as sales ledger, and payable we label it as purchase ledger. Now, we go back to cash book because today this is what we're going to learn. Now, cash book is, you notice, special journal, we record all the sales and purchase. And any credit purchase of your asset and stuff like that goes to general ledger. So, anything to do with your bank or cash is recorded in your cash book. Easy as that?
Yes.
Right now, what I want you guys to do is take a piece of paper. Give me a piece of paper. Okay, now let's look at this example. Now in this example, what they tell us on March 1st, balance brought forward cash is this much and bank. So basically cash book is a combination of cash account and bank account. Last time how do we do it? We do cash account like this, right?
Yes.
And then we do bank account like this. So instead of having two different separate accounts, we're doing it into one account. That's the only difference. Okay, now let's look at this. This is a balance brought down. Because cash and bank is an asset, balance brought down should be on your debit side or credit side? Asset, so it is debit. So here, on March 1st, 20x8, March 1st, balance brought down. You go to your cash column and key in 600 to 20. And for bank, it will be 7142. Easy?
Yes.
Okay. Now let's look at this. The following paid their accounts by check. So what's happening here? This is check. So which account is it? Is it cash or bank?
Bank.
Bank. They pay. So we are receiving money or paying money? Are we receiving or are we paying?
Receiving.
Bank increases or decreases?
Increases.
So when bank increases, is debit or credit?
Debit.
There you go. So you have to debit your bank, right? But who have paid us? These 3% paid us. And interestingly, they told us that in each case, deducting 5% cash discount. Alright? So we are giving them cash discount, right? So this cash discount is our discount allowed because we are giving the discount, you see? So how much is the discount for this? slip. On your debit side, how much will you see the discount is how much? 30, correct? So how much we will get back the money? 247. Okay, he has to pay me 260. I gave him 30 in discount. So I received a check of 247. So the same thing, this is when? March 2nd. So the same thing can be said for pre-fish. Pre-fish discount is 16. So 304. And hot, not hot, tea-old. Tea-old is 420, discount is 21. And if 21, this should be 390. There you go, we record that already. Right now, the last one, March 4, paid rent by check. So bank increase or decrease?
Decrease.
Debit or credit? So I go to my credit side. I'm going to write here March 4. What is the description here?
Rent.
Rent. On my bank column, it's going to be
430.
Okay, assume that's all for the year, for the month. You have to close the account, right? You have to do the balance, get it down, right? Do one column at a time. Let's just do bank. So how to do this? You're just going to put a long line here, like that. Same thing here. On the same row, you put it this way. What we're going to do, we're going to add the bank side. So this side will be 430, right? How much is this side? Can someone count for me? 7142 plus 247 plus 304 plus 399. How much is it?
8092.
8092. So which side is more?
That's
So I will write here 8092. The same thing I will write here 80.
92.
So how much is the missing figure?
7662.
7662.
7662.
Yes.
So what do I call this?
A balance
carried
down.
down. March 30. Okay? That's it. Now can I do the same for cash? I can, right? Cash column is 0, 620. So this is 620. This should be 620. Carried down here is 620. Now, how do you do discount? So we gave the discount here, right? So this is our discount.
Allowed.
This is discount.
Received.
Receipt. How much is it? You just total it. You don't have to do anything with your discount. Just total it and put it in. So how much is it?
50.
10, 15, right?
Yes.
So always how to close the account with your brought down. So on April 1st, balance brought down. How much is it? 620 and 766. That's it. This is how we do a cash book.
So we took the discount.
Yeah. After this, do you need to do a cash key account? No need. Do you need to do a bank key account? No need. But you have to open up discount allowed account and also discount receipt. That I will explain later. But right now, any problem with your cash book?
No.
Looks easy, right? Let's do
Yeah.
one question and then we'll come back to this. Right. Thank you.
Copy.